Okay. Hi, Sabrina. How are you?
Good.
Good. Okay. We'll give it a couple more minutes. It's like right at dinner time for everybody. Hmm. Try to get my screen up while we wait. It's been a while since I've done, oh, here we go. Mhm. Let's see. Got a new computer, so everything is kind of may not be able to record. Oh, man. Can you see my screen?
Yes.
Okay. Yay. Cancel. Leave it go. Okay. Now I have it opened. Move these. Not that one. There we go. Okay. Let me do the sharing of this. We'll get started, and then when everybody else hops on, that's fine.
You guys do your thing. Just remember to hit that record button.
Let me just double check because it was supposed to be. Let's try it again. It says recording. Is the button not there? Is it showing that it's recording?
Yeah, it is. It says it's
Okay.
recording on my end. Yeah.
Okay, good. Okay. Okay, let's see. Full screen. There we go. Okay. And I can't see comments, so if anybody can see those, let me know if there's any questions. Okay. So I wanted to thank everybody for hopping on tonight. I know it's Thursday night. That feels like what, Tuesday, Wednesday at this point. So thank you for hopping on. I do appreciate it. My name is Beth and I'm with EXP. And just a little bit about me. I am a wife and a mom. I have 4 kids. My oldest will be 15 next month, which I cannot believe. And my baby is going to be 8 in August. So they keep me busy. And then I have 3 fur babies as well. And they are, I have 2 dogs and a cat right now. And I love coffee. So that is one of the things that I do love. And I like spending the summer at the lake or the beach or the water in general. So Mark, I'll let you introduce yourself.
Yeah. Hi, everybody. Thanks for joining us. I'm Mark Skeen with Total Mortgage out of Chapin, South Carolina. I, to kind of mimic something Beth said, once it warms up, which we're dreaming of right now, the way the weather is, but love to spend as much time as possible on the water with my kids. The one thing I'm really passionate about is helping people to get into homes. So I've kind of found this career path several years ago, and one thing I like about it is I feel like we get to help people and help people in a significant way that could possibly impact their family for generations. So hopefully we'll provide something that you can take away tonight and help you make the next step towards home ownership.
Okay, oops. Yeah, and let's try to get this to change. Okay, so why buy now? So there's obviously the financial benefits to home ownership, and just a few. There's it kind of forces you to save, which I know when I read that, I was like, yeah, it does, because you gain the equity in your house. So which, I really never thought of it that way, but it is something to think about in that respect. It does build the equity in the house, but it also you have the freedom to customize your house, which you don't always get to do if you're renting or if you're living with somebody that doesn't want you to do your own thing. Anything to add there, Mark?
No, I think that covers most of it.
Okay.
Our research shows us that when people buy a house, even if it's going to be temporary, they wind up being in there for about 10 years. And even if if you weren't buying a forever home and that's all you did, 10 years of growth in equity versus throwing away money on rent is significant. So it's always a good thing.
So I found this today. So I changed out what was here originally and kind of tried to do it a little bit more, but it just kind of gives you the idea on the net worth from back in 2010 to up to a couple years ago now. But it just kind of gives you that idea of the renters versus the homeowners, but also just the progression of the equity. And this one is the same concept, just uses numbers instead of more of a projected in the future instead of the past kind of thing. And then the purchasing power. So this one here, I like this because it does kind of give you an idea of what to expect. But what this one doesn't have is the interest and the taxes added in. And that's always a big part that isn't always talked about. I don't know, Mark, if you want to.
Yeah, and this kind of outlines, like you're saying, this doesn't include taxes and insurance or mortgage insurance. This is just a basic principal and interest chart. But we're talking about the importance of making a move now and why now is a good time to buy. And you can see there it shows as interest rates rise, you obviously are going to lose a little bit of purchase power. One thing, especially for the area that we live in, that makes this kind of counterintuitive is there are a lot of people right now waiting on rates to drop. I saw some numbers about a week or so ago that said for about every half of a percentage point that rates go down, we have another 8 million people in the market to buy a house. In an area like ours, where our inventory is already low and there's already some pretty good competition, that's another thing people just need to keep in mind as the interest rates start to drop and we have more competition for the homes that are available. It's very likely to wind up like it was, back in 21 and 22 there for a while, where you're getting 50 or 60 offers on the same property and open houses, the lines are going around the block. So particular for people who are using first-time home buyer loans like FHA, VA, it's a time of opportunity, I think, now to move before interest rates drop significantly, because again, we'll be in a situation where a lot of sellers are going to be able to pick and choose exactly who they want to sell their home to. So while you lose purchase power with interest rates a little high, they've already come down a bit from what is showing on the high rate on this chart. So it really is a good time to go ahead and at least get things moving, get a pre-approval done, and make sure you're positioned to make an offer on the house you want.
Right. Okay. And then this here is again just a kind of what happens like when the interest rates go down, the buying power goes up when the interest rates go down. Sorry, it's been a minute, but but this is just kind of just an overview of that here as well.
Yeah, and I doctored that slide yesterday to update it. It had stopped at numbers from 2022, I believe, or 2020. So I just went in and basically what this is showing is if you're comparing a $209,400 mortgage in 2020 versus today, and that interest rate that I pulled up there was the Freddie Mac average over the last month on conventional loans. So again, it just shows the exponential kind of value that you're playing with there. The difference in monthly payment from, now 4 years ago or so is $240 and change. Annually, that's almost $3,000, and over the 30-year life of the loan, that's $86,000 and change. So it's definitely good to go with someone who's going to offer you some options on rate and make sure you understand what those options mean, not just as far as your cash to close and what you're paying to get a lower rate, but how long it's going to take you to get a return on that investment.
And then here, the objective. Obviously, my objective to my clients is to consult them to keep you safe through the whole contract process, to guide you through that process, and also to educate you, kind of like we're doing tonight. But what was it I was going to say here? So for example, the consultation. So when I do a consultation, I do have, it's a future home buyers questionnaire, and it does go through some questions on there. And if you say, for example, that you need to have a bedroom downstairs, but then you send me a house that you want to look at, but it doesn't have that bedroom on the first floor, if it's something that you do want to reevaluate, that if it's important or not, we can. But if you tell me that that's something that's definitely a must-have and is not a negotiable, we'll just have that conversation, because I want to keep you on track as well. And there might be a whole bunch of houses that do not have that. But if it's something that's definitely important, we're going to make sure that that is something that the house does have. Also, for the education part, I do have a whole bunch of YouTube videos, but on my channel, I have through the whole escrow process from the time we do a contract all the way to closing. So that way, each step of the way, you're able to really understand what is going on in that process. So that way, you know what to expect, and you can also look ahead and kind of get an idea what to expect in the future. Yeah. And then these are just some of the buyer fees. So when looking at buying a house, obviously, the things that some people do not think about are the inspections. So they do happen after we go into contract in the due diligence period. And here in South Carolina, in the Columbia area, that is usually about 10 days. So it'd be 10 business days. So that doesn't always happen. And especially if the market does turn back to a higher seller's market, we might have to use that as a negotiating tactic to decrease that. But right now it is 10 days. And all the contracts I've done lately are still in that 10-day due diligence. So that does vary. And then obviously an appraisal is needed to just verify the value of the home for the lending side, as well as the title fees, the escrow fees, and the bank loan fees as well. And this is just a chart that kind of just goes over some of the different way that they looked when you do get the loan estimate. So this one does have the just kind of what the monthly payment, and it does have like the different taxes and insurance and that kind of stuff in there, how much you would need to bring to closing. would be over here as well, but it kind of just gives you an idea of that. And then in the first step, which is really what surprises a lot of people, instead of really searching for houses right away, the most important thing is to talk to a lender to get that pre-approval. So that way you know what you have to spend and you're not looking at homes, wasting your time on things that you just are not pre-approved for. So I don't know if Mark, if you have anything to say about this one or not.
Yeah, it's I always like to be sure to put out there, especially if people are looking at the process and kind of approaching it for the first time or trying to figure out how all of this works. Because we can, do a deep dive on rates and all kinds of stuff. And we certainly try to do that as we get into the process. I've always been a firm believer, if you're having a hard time making up your mind, you probably just don't have all the information you need yet. Usually, once you get all the information you need, the best decision, at least for you and your family, becomes kind of obvious. So we get to all of that and we try to provide all the information. But often the best and first step is really pretty simple. And it's contacting a lender and just filling out an application so we can find out what programs and what kind of purchase price we can get you qualified for. Often, once we do that, we can get people qualified for more than they were expecting. So another thing we do at that point is usually drop back, try to have a conversation about what kind of monthly payment you're going to be comfortable with. Just because our goal is not just to position you so that when you go out and make an offer on a home, you're in a great position to win the bid that you put on the home, but also to make sure you understand what all of that means. What's your monthly payment going to look like? What's your cash to close going to look like? And really, it serves a lot of different purposes. It's understanding what you can shop for, what you qualify for, and what you want as far as what you're going to be comfortable with the monthly payment amount and all of that kind of thing. So there are a lot of different reasons to do that. And like I said, there are a lot of details you can jump into as you get into the process, but really the first step is pretty simple, and it's just contacting someone and doing an application.
Definitely agree with that.
Mhm. Okay, and then here is Mark's contact information. So if anybody wanted to reach out to him and start that process, you're more than welcome to, but that's his contact information. And I will do a follow-up with all his contact information as well as mine, if anybody needs that after the fact. So this here, let me see what it says over here. And it was kind of the same thing as we just talked about with the reasons that you want to do the pre-approval. And then the shopping, that's the fun part. So when we get to this step, this is when I set you up on all the searches and we do figure out the things that you must have in that house, what you do not really don't want, and some stuff that you kind of want, but it's not a deal breaker either way. This is that step. So I do have things up on my website that you can go in for specific areas, but I do set it up specifically for each person. So that way it is tailored to what you're looking for. And then I do also, like I said before, I do have that future home buyer questionnaire. So it helps me know more of what you're looking for and if there's certain specific things that you do need. Let me see, look at my cheat sheet. Okay. And again, it's just more things. This is from my actual website. So this is just different homes that are available. And it just kind of, new construction also pops up on there. But this here was just to show that you can kind of see more similar properties. If you liked a specific one, it does allow you to do that as well. When you do if you go to open houses or new construction, or even if you're looking on Zillow or Redfin or any of those, just let them know you're already working with somebody. So that way they know that they don't, I don't want to say bug you, but they kind of let you do your thing, and they'll reach out to your agent with to see if you have any questions versus contacting you. Okay, so the third step is the negotiation. So this is when we write the contract up and decide what you want to add in it. And the things that we do look at are like what's going on in the market. Are there a lot of buyers that are looking at that particular property? When there is a house that you do want to put an offer in on, what I normally do is call the listing agent and find out if there are any other offers on the table or if they're expecting them. And also I try to find out what is like the biggest thing that the seller is trying to get out of it. Granted, a lot of the time it is the most money, but there are some times that they just need extra time to move out, or they something more specific. So what I try to do at that point is add it into the offer so that way it looks a little bit more appealing. Obviously too, we got to take into the account the loan type because sometimes that does affect the offer. Sometimes it doesn't, but sometimes it does. And in addition to the condition of the house and what would be needed after closing, if anything needs to be fixed up, all those things do come into play when we do an offer. And again, this is just more of the due diligence. So in this step, so in the contract, there's 3 different types that we can fill out. So the first one is due diligence with right to terminate. The other one is due diligence. They just changed the wording not that long ago, and I'm trying to get it right. The one is that you can ask for the repairs. They don't always do it, but it's again another time to do the negotiation. And then the other one is you have the right to inspect, but you're just accepting what you find, or you walk away after you do the inspections. And the other one, which is I don't recommend that you do unless you don't have a choice, but again, different situations, is sold as is with no right to terminate. That means you would go under contract. Even if you do the inspections, if stuff comes up, you don't have, you really are not supposed to walk away because they do have the earnest money. So the earnest money is the deposit, and commonly it's between 1 and 2%. I've been seeing a lot of the 1% or even sometimes a little lower than that. Contingencies. So depending on, again, in the negotiation, but there's different loan contingencies. If you are needing to get a loan for the house, you'll have to go through that a process with the underwriters and the lenders to make sure everything goes through. So that's a contingency. And once everything's done, we do get that clear to close from them. And at that point, then that contingency does go away, as well as the appraisal and the inspections. And the inspections that we commonly see, home inspection and the termite inspections, are 2 that I always recommend that you do because you just never know. Around here, my broker does say it's never if you get termites, it's when. So that's why we always say that you should get a termite inspection, because you just don't know. But that way you do know. And signing the loan stuff is again with the lender. And once all those things are finished, then the move in on the escrow date, and unless it has to be changed. And this kind of just goes over some of the costs for the inspections. And again, they vary depending on the inspector, but these are commonly common for those. And there are some inspectors that will do, I think, all of those in addition to the HVAC. So what I normally do, we'll have the home inspector come out if it's not the same company. And if he recommends that we bring a specialist in, that's when we bring like the roof inspector or the HVAC inspector, or like the pool. Usually you make that decision beforehand, but it's important to get the home inspection because that way you do know what's going on with the house and you kind of have an idea of what would need to be fixed and what kind of cost that could take if it does need to be fixed.
Yeah, but someone put in the comments, they actually just asked, why is it important to get a home inspection? I think you just touched on that, and change hats for just a second and put on my contractor hat from back in the day. But sometimes when we get those home inspections done, and first I'll back up just another step because there's a lot of confusion sometimes with first-time home buyers and people who have not been through this process before. They know we get an appraisal done. So one thing I always like to point out to people is all the appraisal is going to do is give us a fair market value for the property. They are going to note a few things, but generally only if there's a major property issue or if the property doesn't meet what's called minimum property requirements, right? And then beyond that, the home inspections are always a good idea just because you really can run into anything from a, $100 faucet that needs to be replaced to 30 foot of rotten sill under a house, which can quickly jump into the tens of thousands of dollars in repairs. So home inspection really protects the buyer in a lot of different ways.
Okay, and then so the appraisal, and then the sixth step is the loan approval. So this is when we get those exciting emails or text messages from the lender. It says clear to close on it, which is always an exciting point because we do know at that point that that side of it is finished and all of the well, they have headaches in there, so all the headaches kind of are behind us and all of that. But yeah, that's always an exciting point, and you can kind of get a little bit more excited when you get to that point. And then at the final walkthrough, this is when usually we do this the day of closing, but sometimes it does happen the day before or day before that, but we try to do it as close to the time that you get those keys as we possibly can, just because that way you know what the house looks like right before you sign all the papers and all the legal information from the attorney. And that way, it looks like it did when you went to tour the house or we were there for the inspections, or maybe even better, hopefully. And this is when we go to the attorney's office. So we do schedule a time with the attorney since we are an attorney state. And at that point, we go in there. It is critical that the buyers, anybody that's on the loan or the deed or any of that, brings their driver's license or the official photo ID. So that way they do take copies of that for the contract. But at that point, we sit down. They go over all of the statements. So it was an audit statement. So it just kind of shows you what payments are, not payments, but what fees are for the credits and debts for both the buyer and seller side. And it kind of itemizes that so you know every little detail of that. Yes. Oh, and then the wire instructions. So if you do wire the money over, we always say that it is extremely important to make sure that you're sending it to the right place. So to actually talk to usually it's the front end for the attorney's office to get the details, who to send the wire to and the numbers and all that. But with all the wire fraud, we just always say to be very careful. And then after that, then you get the keys and then you can go and start moving yourself in. And that does happen the day of closing. When you do sign all the documents, when you have them all signed, then you do get the keys. Oops. Does anybody have any questions?
Yes, I do.
Yeah.
This is an outstanding presentation, and I would say especially for some, first-time buyers or even doesn't matter. I still hear third time buyers still don't know what's going on. This is, you did this for us. Do you do anything like this for new buyers, new clients that walk in?
I tried to. I mean, this is the first time I've done this particular one, but it's like a buyer consultation PDF that I do, kind of go through the same process with them.
This is great. I mean, if there was some way you could get this out to people who are thinking about buying a house, boy, that would save a lot of hardship on their.
That's why we marketed, tried to get as many people to come join the seminar as possible. But it's it's funny because a lot of people I talk to clients a lot throughout the day, and I tell them, you'd be surprised how many people call you on a Saturday, and it's like they woke up and decided they're going to buy a house. So yeah, make things a lot easier on everyone if we could get more people to get the information they need beforehand so they know what they're getting into. It makes a big difference.
Great, really great. I'm impressed.
Thank
Thanks.
you. I'm gonna try to, I have a few links that I'm gonna drop in the chat just for, it is for the questionnaire that I was saying about. I'm going to try to think what else I have in there, but I'm gonna drop those just so it's there. I will put those, in the email as well. I'm gonna try to stop sharing, and then I'm gonna go and do. There's the comments. Oh, they're there. Thanks, Darren. What is usually the amount of money that you need to purchase a house? It's going to vary. Mark, do you want to answer that one?
Yeah, I mean, it really just depends when you ask about the amount of money you need to purchase a home, that could mean a lot of different things. If you're talking about cash to close, that's going to depend on the loan program. In a lot of ways, their minimum required investment for FHA is 3.5%. You can do conventional loans with 3% down. You have VA, USDA, and some down payment assistance programs. And one thing that people often miss when they ask about that, though, is there are really two different buckets of money that people look at when they go to buy a house. You have your down payment amount, and then you have your closing costs. So a lot of times we get calls from people who say, hey, I want to buy a USDA home or a home that's eligible for a USDA loan at 0 down. They've kind of got in the back of their mind they're not going to need any money. So that's another thing that's great good thing to educate new home buyers about, or someone who hasn't been through the process before, is that yes, there are 0 down programs and all of that. However, there's the whole closing cost side, which are the attorney's fees, the prepaid taxes and insurance and interest, the title insurance. There's a whole list of things that goes into that. But generally speaking, for a home in the $250,000 price range, generally your closing costs are going to run about $4,000 or $5,000.
Okay. Mark, if you want to drop your link in there in the chat also for your application. I thought I had it, but I can't find it.
That's okay. I'll just pop it in here right now.
I did drop a few other things in there as well. And can't find my Calendly link, but I will drop that also. If anybody wants to set up a time to chat, if they want to go over something again, or if they have specific questions or something. But of course, my computer's being a little stubborn with that right now.
I just subscribed.
Let me see. Why is this doing that? Okay. Let's see. No. Okay, well, I will add that to the email. For whatever reason, I can't get it to pull up, but let me do it this way. Does anybody else have any questions?
Yeah, did you say you were going to send us a copy of the presentation slide?
I can, yep.
That'd be great.
Let me see. So I'm going to send my Calendly link. This one does have some of those other um, links that I can't get to pull up right now. I'm not sure why, but I'm going to do that right now. Try to text it to
I
myself.
have a question.
Yeah, of course.
So I know that you were saying, and Mark was saying also in reference to the 3.5%, that's considered for the down payment, and then the 4,000 to 5,000 for closing costs.
Mhm.
Now, will all of that be considered in for the mortgage amount? That'll be breakdown. That's the 6.6%. Am I correct?
Well, so what we're talking about is a few different buckets of money there. Okay. So what I was saying is you've got, when you go to buy a home, depending on the loan program, your actual down payment's going to be a little different. So your down payment is generally going to be like the deposit you put down on the house, not your earnest money, but your down payment for the loan. So if you buy $100,000 house and you're doing an FHA loan, that 3.5% would be $3,500. That would be your down payment. Okay. And then you would finance the rest in your mortgage, and that's what your monthly payments and everything would be based on.
Okay, that makes sense.
Along with, you know, when we talk about monthly payments, there's your the principal, which is the amount, if you just divided the amount of your loan by 360 payments, generally that's going to be your principal payment. Okay. Then there's going to be the interest that's added. In addition to that, you'll have your taxes and insurance, your actual property taxes that are due every year, and your homeowner's insurance. So if there's a storm and your roof gets blown off your house, the insurance is going to take care of that, right? Those are all added into your monthly payment as well as monthly mortgage insurance premiums. Okay. So when you get a quote, what we try to do, or what I do, is I always like to talk to people about their all-in monthly payment. That's your monthly payment that includes everything. And the other thing, I always try, when you first start working with a lender, it's always a good idea to work with someone who maybe is going to estimate just a little bit high, because those numbers all get finished up usually within a couple of days of closing is when you get those numbers exact down to a penny. And what I would always like to see is your actual cash to close and your actual monthly payment. If that number moves at all, I want to see that come down a little bit before closing instead of going up, because that makes for happy customers. If you have a customer, their cash to close goes down on the way to closing, they're happy. If it goes up, not so much. So I try to estimate a little bit high. I know there are some lenders out there who, just for an example, are still putting $350 on their good faith estimates for an appraisal, when in South Carolina, nobody's paid less than $600 in the last 2 years. So they basically try to get customers in by making those numbers look good or appealing up front. I'd rather take an honest look at what your actual numbers are going to look like. And if anything, guess a little bit high so that it looks better as you get to the actual amount that you have to bring to closing.
Thank you.
Absolutely.
And then the earnest money that I was saying about that, the 1 to 2% of the offer price, that right, or that fee would be paid after the contract would be ratified. So that would also go to the attorney, and that, say it's 1,000, will be taken off of what you owe to bring to closing, but that will also be deducted from what you need to bring.
One thing lenders always love to talk about when we talk about earnest money is use a check. I know nobody checks anymore. Go to your bank and get a check, get something right out of your account. Just because we run into situations often where people use checks or get money orders with cash or something like that. And unfortunately, when that happens, because we are subject to anti-money laundering and anti-piracy laws, we can't give you credit for that. You still wind up getting it back at the attorney's office, but we don't want to have to increase what we show you're required for your cash to close by backing out your earnest money deposit. So just something to keep in mind.
Does anybody else have any questions? Or
Yeah.
need to see a slide again?
On on the slides, on the fourth step,
Mhm.
due diligence, before you started going through the things that you had listed, you mentioned 4 other steps that weren't on there.
Mhm. Let me go back to it and look at it. It could have been, let me see. So the steps 4 to 6 happen all at the same time. So it said the fourth step is during due diligence, and then steps 4 through 6 happen simultaneously. So that would be the due diligence, the inspections, as well as the appraisal and a loan approval. So all of that stuff happens all at the same time in that section right there.
You know, but what I'm saying is that's the 4 things you mentioned, which I can't remember what they were, couldn't write fast enough. Because I thought maybe I was on the wrong page, but they seem really important. And then after you explain those 4 steps, you went on to what was on the page.
Okay, let me pull it back up.
And you had said it verbally, but it's not printed on that page. The four things that you said when you got to that page.
Trying to remember what I said. I was talking about the different types of the due diligence. So like the due diligence with right to terminate. Is that what you're talking about?
Right, that
Yeah,
was
so on the contract, so there's 3 different types that we can write up. So the one of those is sold as is, and that means you can't terminate that contract at all without losing your earnest money. And sold as is with due diligence, so you still have that time to do the inspections, but anything that they do find during that inspection period would, it's pretty much saying that the seller isn't going to repair any of those things that are found. And the other one is the sold with due diligence. So that's when we have the ability to do all the inspections like we did with the last one. But the only difference is we're allowed to ask for the repairs, and we usually go back and forth with those sometimes. And at that point, you do have the ability to walk away or not. What I like to try to do too is the earnest money that is needed in the contract. So we have to put a date or a time period. What I like to do is have it end after the due diligence. So that way, if you do walk away, we do not have to worry about the attorney getting involved to distribute that money. So once it's in the file, I guess, that at that point, then it just doesn't get released. Everybody has to sign off on it, and it's a lot more complicated. So I like to, doesn't always happen, but I like to have it be required or deposited or sent in after the contract, after that part of the contract's completed.
Thank you.
You're welcome.
I have one more question.
Yeah, of course.
So what is the normal time process, right? So say right now we're renting and we get the pre-approval, and from that pre-approval process to the time that it closed, what is an average time frame?
So a lot of it's going to depend on how quickly you can find a house that you like. If you find a house that you like really quickly, depending on what the seller is looking for. So sometimes they either want a quick close or they want, say, a 45-day close. That's one of those things that we do have the ability to negotiate. But I try to not have my contracts close less than 30 days from the time that we are under contract. Sometimes the lenders are able to do it quicker than that, but when I do the contracts, I try to keep it at that 30-day mark or a little bit more depending.
Does your pre-approval expire at any point?
So the letter that we actually send out for the pre-approvals is usually stamped for 60 or 90 days or something like that. But the truth is, as long as we've got you in our system, we can generate new pre-approval letters at will. So it's a matter of, if you're shopping and it takes you more than 3 months to find something, we may want to update some of the documents. Credit is generally good for 120 days. So you've got a lot of time out there. I know, just going back to that crazy time we all worked through during 21 and 22, I had people that I kept in my pipeline for 13 and 14 months while they were out looking for a house that they could actually get under contract. So once you're pre-approved, keeping you that way is not a problem. That's something we try to stay on top of. And fortunately right now, getting started sooner instead of later is probably a good thing, again, because the competition for the properties that are available out there now is only going to increase as interest rates continue to drop a little bit. So it's a good idea to get started sooner instead of later would be my advice. Not to mention, once that competition increases, because some of the funny games the builders have been playing with their prices, we could very well, with the property shortage and interest rates coming down, if we actually do see that happen, we could also see some of the home prices start to go up a little faster than we normally see. Usually in South Carolina, for example, we see property appreciated about 3 to 4% every year. That can move a little faster when there are several people bidding on the same house. So, but yeah, and like Beth was saying, once you get your pre-approval done, once you find a house and get it under contract, usually at that point you're 30 days away from moving in maximum.
Perfect. Thank you.
Absolutely.
I have a question. With the pre-approval, is our credit pulled one time and then shopped around, or does everyone that you talk to have to pull our credit? And is it a soft inquiry or a hard pull?
Well, so we've actually, as of just a few weeks ago, we've got things set up a little bit uniquely as far as what we do right now. We start everything with a soft pull because we've been able to get things situated so that we can actually run our files through automated underwriting now and do a proper full pre-approval with the soft credit pull. Okay. The truth is, and you can pull this up on the CFPB website. As a matter of fact, I've got it bookmarked. I'll drop it in the comments over here for everybody to look at. But when you get your credit pulled by a mortgage company, it's very different than having your credit pulled to buy a car or take out a personal loan or do something like that in two ways. First, if it affects your credit score at all, it's going to be between 0 and 3 points. And then you've got a window of 45 days where your mortgage company can pull your credit several times. And it only affects your credit that first time. It only shows as a single pull as long as it's done within that 45-day window, because they know a lot of times we have to update things on the credit report. There are several loan programs that require us to do a pre-close credit report. So it's a little bit different than, when you go shopping for a car and you sit down and the next thing you know, you get your, you check Credit Karma or whatever, Credit Sesame, and you've got, 52 inquiries on there where they send it out to a bunch of different people to check your credit. We absolutely don't do that. We start with a credit pull, a soft credit pull. Once we get you under contract, we are going to have to do a hard credit pull to get the actual credit report in the file. And there are a couple of other steps that we take too, and they're just trying to, as a convenience for our customers. I know it's been about 2 years ago. I saw an advertisement on my computer for a company that had opened in Columbia, South Carolina, to help get people better car insurance rates. And I made the mistake of filling out an online form for that, and my phone rang for 3 weeks straight. So one of the other benefits, we do the soft credit pull that doesn't set off what are called trigger leads, where you have people calling your phone all day. And then in the interim, while you're out shopping and working on getting a home under contract before we have to do the hard credit pull, I send you what's called a pre-screen opt-out so that once we do that, you don't have to worry about getting 300 phone calls over 2 days with people trying to see if you want to work with them to get approved. So because that can be frustrating. So does that answer your question though?
Yes, thank you.
Absolutely.
I got one question.
Yep.
So when somebody comes to you and they say, Beth and Mark, my credit's not so great. I have a little bit of money saved. I realize that rates are going up and down. The inventory is not so, large, for argument's sake, right? Is there a minimum credit score, and is there a minimum amount of money that people need in order to get started? Like, what's your tip of how much money or credit score, like a combination, that somebody would need to say, okay, now I'm ready, regardless of the pre-approval. Now I'm ready to speak to Beth, or now I'm ready to speak to Mark, Like, at what point?
I would say call me regardless of what it is, just because, what the other thing that we can do, not just as a lender, but with a real estate agent is, we can help you build a path from where you are to where you want to be. If you've got no money and your credit score is not where it needs to be, you can either sit there and not do anything, or you can go and call someone who can help you get to where you want to be, right? So a lot of times when I hear people and I talk to them and that's the situation, I tell them the answer is not no, it's just not right now. And that's because we can dig in. The people that compile our tri-merge credit reports for us give us some really powerful tools to use. I've been able to do things using Wayfinder reports and what if scenarios that credit repair people dream about. I had a Richland County Sheriff's deputy that came to me. I guess it was near the end of 2021. And he came to me with a 540 credit score, and we were able to get him up to a 670 in 2 weeks and get him into a house. Now we can't do that for everyone. It depends on what's on your credit report and what your situation is, if you have money to throw at the problem or not. But, here's the thing, that time is going to pass whether you start working on it or not. So contact someone who can help you, and who can help you first on the lender's side, start to improve your credit score and get you positioned to get some down payment assistance if you don't have that money. And then again, the real estate agent at the same time can be helping you, let them know exactly what you're looking for in a home, so they know what kind of criteria to set up a search for you in. And then, eventually when those two things come together and you're ready, you'll be able to get into a home and stop paying rent.
And one of the things that I like, when you have that 6 to 12 months, it's nice because it does give us time to get to know each other some more. And we can actually build that relationship that I know that this particular neighborhood is kind of what you're looking for. For example, so there's a buyer that I'm working with right now, and he has a very specific type of house that he's looking for. Now, I've met him maybe 6 months ago at this point, but we keep in touch. And when I keep in touch with you, it's not to bug you. It is just to give you kind of like an update, and it's just a way to build that relationship. So then when you do start looking for a house, I already know what you are looking for. So when I do see those houses pop up, I usually get that notification just a tad before you do with the searches. So if as soon as I see something, I know it and I can send it to you because I knew it would be a good fit.
I love that you say that, like having the ability to just be a little bit faster than everybody else, but also the concept never has been what? It's never been wait then buy. It's always been buy then wait, so you guys did great with this. You really did. I think you answered a lot of our questions and gave us, a real guide and feel of, regardless if I have money, I can buy a house, regardless if I don't, regardless if I have good credit or bad credit, you guys sort of paved the way for what we're looking for.
Good. Does anybody else have any questions or anything that you thought of that you just we didn't answer, which is very possible?
I got one more. Sorry, y'all. So we've been working on our credit for a while, but we've been looking through Credit Karma. Is that something that we don't need to be looking at? Because on Credit Karma, it gives us the hope, like, okay, yeah, we're almost there, but is it really accurate?
Credit Karma's close, and they're all kind of close. And all it is there are a handful of different algorithms that these companies use. And basically, they're using the credit score that they give you as an advertising tool, so they can sell advertising for their website, right? There are a few things that those services are really good for. They will let you know if there's a payment late. They will let you know when something updates on your credit very quickly. They will let you know if a new account is open quickly, which is good because that's something to keep an eye on if you don't have everything locked down. So it's really good for all that. As far as matching the Fair Isaac Company or FICO actual mortgage credit score that we pull, it's close. I've seen it go in either direction by as much as 20 points when we actually pull the FICO score to see where it is. But you know, as far as using it to kind of give you a guidepost to where you are when you're working on something, that's not a bad idea at all. It'll at least show you if you're moving forwards or backwards, and it does show you when things update. So it can be a useful tool. I would just be aware that when you go to have your actual mortgage FICO score pulled, it may be within just a few points. It may be as much as 20 points off in either direction. It's just hard to say.
Okay, well, I appreciate everybody hanging out with us tonight, and I hope it helped, and I hope that you got some little tidbit of information that you might have not known, or it just kind of reiterated it for you. But I do appreciate everybody coming to chat with us tonight, and I hope you have a fantastic rest of your night and a great weekend, because tomorrow is Friday.
Thanks for joining us,
Good
everybody.
job, guys.
Thank
See
you.
you later. Thanks for coming.
You gotta get
Bye.
this out to the people.
All right.
Hey, that kid can't have bad credit yet. Give me his number.
See ya.
Thank
Bye,
you, everyone.
you.